In July, I made a video on ParcelPallogistics in which I explained why investing in the company at those levels was a steal. Sure enough, we saw some big moves to the upside not long after that, and since then we've cooled down just a little bit to establish a new ground floor. Now in this video, we're going to talk about the recent developments that ParcelPallogistics has made, as well as go through their Q2 earnings from top to bottom, including their 268% increase in gross margin, to see if an opportunity still lies here. And now without further ado, let's get into it. Just a quick reminder to hit that like button, hit that subscribe button, hit that bell icon to support your boy Jay. I really do appreciate it. And now let's get into the video. ParcelPallogistics helps deliver products efficiently in a cost-effective manner. Now, as time goes on, this is going to become more and more important. As you guys know, everything is shifting to, online delivery and same-day delivery and all this kind of stuff, right? So ParcelPal, this is what they do. Now, on September 1st, the company signed a definitive agreement for its first US acquisition, which was waiting to be closed since last month. So now that this is official, the company has now officially doubled the annual revenue of ParcelPal, as well as the company's size. Now, the acquired company, as stated in my last video, is a US-based delivery company, which ParcelPallogistics acquired for $3.1 million. 60% of the total purchase price was paid in the form of cash, while 40% was paid in the form of restricted shares of ParcelPal stock. Both the companies have also entered into an exclusive services agreement with ParcelPal's principal business source. It is important to note that the cash portion has been secured through private placement financing. ParcelPal CEO, Rich Wheelis, was excited about this acquisition and said that this deal is the largest milestone to date for ParcelPal. And I quote, "Since the day I joined ParcelPal, I have been working hard to increase margins, increase efficiency, and to search for and execute upon expansion opportunities as they arise, including into the United States, which is the world's largest consumer market. I believe that this acquisition is an excellent first step to gaining a foothold in the US." End quote. As a result of this deal, Rich has done just that. Investors will need to keep him in check and make sure that execution keeps happening. But if you do look back at what we discussed in our interview around 6 months ago, myself and Rich, he has done what he said he was going to do. Now, this company is by no means a flashy one with explosive revenue growth. However, what it is undeniably undervalued at this time, especially after this acquisition. And it's growing steadily. And it's doing it while looking exponentially better financially than it had been. Steady versus flashy. What do you prefer as an investment? Speaking of financials, let's take a look at their Q2 results. The company reported its Q2 results on August 30th, highlighting a 268% increase in gross margin. And at the same time, the net loss of the company has been reduced by 45%. On the other hand, cash increased from $255,000 to $433,000 in just 6 months. Revenue was quite flat, and this is something that could be attributed perhaps to the pandemic. However, this is something that I'll be looking at very closely during Q3 and Q4 because I want to see improvement here. With the US expansion now official and ParcelPal slowly but surely churning away, ParcelPal does present an intriguing option for investors. Like I said before, this is by no means an explosive growth company with explosive revenue growth. However, it is growing extremely steadily. Things have turned around a lot since Rich has taken over, and this company is doing a lot better financially. The latest acquisition isn't the only development made during the last couple of weeks. On August 31st, the company signed a Canadian laundry delivery service. Under this deal, ParcelPal will offer same-day as well as next-day delivery services for this Canadian laundry delivery service to clients in the Vancouver area. This new deal is part of ParcelPal's broader plans to diversify its customer base and execute on additional profitable business engagements. Just yesterday, ParcelPal also announced its plans to expand its services with an existing large meal kit delivery company for which they already provide same-day delivery courier services in Vancouver and Calgary. If you've been following this story at all, this company is clearly Good Food, a TSX-listed company worth $730 million right now. So since ParcelPal is now trading around the same price that I made the video a couple of months back, let's go through this again. Okay, so prior to that first acquisition that we mentioned of the first US company, ParcelPal revenues were expected to come in close to $9 million in 2021. Now, if we apply the added 4.6 million USD in revenue, that means that 2021 could bring in an estimated 14 million, with 4 to 6 million in gross profits. Currently, ParcelPal is trading at around a $10 million market cap US. ParcelPal is growing their business in a smart and efficient way, and no one is really noticing. And so the share price will literally have to increase by 40% before they are trading at a 1 price to sales ratio. Now, again, this was the same story a couple months back. We saw that increase and then we lost it. So no matter what way you cut it, this is a pretty attractive number for a profitable company. The stock did hit 15 cents, as I mentioned earlier, Canadian, after the LOI of that first acquisition. And now, again, it's back to the same level that it was pre-acquisition, which is just silly because the company has doubled, basically. So no matter how small the company, it's hard to overlook a profitable one that is trading at a PS ratio of less than 1. And with ParcelPal now working on expanding their US business, I would think that this will likely not be the only US acquisition this year. So based on numbers alone, I'm personally content holding my position in this company for the remainder of the year as I await Q3 and Q4 results. So should you invest in ParcelPal? Well, this is obviously the most important question to you, the viewer. And that answer is that's really up to you to decide and for you to take your financial circumstances into consideration. But let's look at both sides of the coin. So why would you invest? Well, first, the price is really low currently, and the company is steadily growing and bettering their gross margin significantly. The continued expansion into the US and improvements in the diversification of the customer base are clear signs that the company is on the right track. Now, why would you not invest? Well, if you're someone who is risk averse, you don't like volatility, you're not really into investing in volatile assets, you open your investing app and if it's down, if it's a red day, it affects your personal life, then you should not invest. If you do not understand the business model, then you should not invest. If you may need that money in the near future and your financial situation is a little bit unstable, you should not invest. The market is unpredictable in the short term, right? But if you understand the value of what you own, then it makes it a lot easier to go through the red days. So thanks for watching until the end, and if this video brought you some value, then please hit that like button, hit that subscribe button, and hit that bell icon to really support this channel. I do very much appreciate it. Take care, and see you next time.
Just do it! Yesterday, you said tomorrow, so just do it!